Fed Rate Cut 2025, 25 BPS flash recap. Labor market shift and market moves. CNN Lib breakdown. Hey everyone, welcome back to the channel. If you're searching Fed Rate Cut September 2025 recap or FOMC Interest Rate Cut 2025, this video has your complete guide to today's big move. From CNN's live coverage, the Federal Reserve slashed rates by a quarter point to 4.75 to 5% on September 17, 2025. The first cut in 9 months since December 2024 and the first of Trump's second term. Driven by a weakening job market with rising unemployment among minorities and youth, it's a risk management play amid sticky inflation. If you're an investor or economy watcher, subscribe, and comment. 25 BPS cut bullish or too cautious? Let's unpack the decision, Powell's presser, market reactions, key data, and what it means for your wallet, starting now. The announcement was a calculated pivot. The FOMC voted unanimously for the 0.25% cut, lowering the federal funds rate from 5.25 to 5.5% to 4.75 to 5%. This matches Wall Street's expectations and signals 2 more reductions by year-end per the dot plot. It's the Fed's way to support employment without fully unleashing inflation, balancing the dual mandate of price stability and maximum jobs versus the aggressive hikes from 2022 to 2023. This easing cycle feels measured, first since pausing last December. Tip: head to federalreserve.gov for the full statement. It's your roadmap to the Fed's thinking. Viewer hook: imagine rates dropping and your savings account yielding less but loans cheaper. Pause and picture that mortgage refinance. What's your first financial win from this cut? Powell's press conference was pragmatic and dovish. At 2:30 p.m. Eastern Time, Chair Jerome Powell called it a risk management cut, noting a very different picture of the risks to the labor market. He highlighted rising unemployment among vulnerable groups, black unemployment at 7.5%, highest since October 2021, and youth rates climbing as alarm bells. On housing, Powell said lower mortgage rates could boost demand in construction, but the nationwide shortage is a deeper problem beyond the Fed's reach. He dodged questions on Lisa Cook's mortgage fraud allegations, calling a court case, and asserted the Fed's data-driven culture isn't politically influenced despite Trump's pressures. Key quote: "What's different now is that you see a very different picture of the risks to the labor market." Versus June's hawkish tone, Powell sounded balanced, hinting at more cuts if jobs weaken further. Pro tip: watch Powell's full presser on YouTube. His pauses reveal nuance. Retention question: Powell's dovish vibe or inflation caution? Which part of his talk stuck with you? Share below. Market reactions were a roller coaster. Stocks rallied initially post-announcement. Dow up 450 points, 1%, S&P 500 and NASDAQ green, but erased gains by close. Dow plus 260, 0.57%, S&P down 0.1%, NASDAQ minus 0.33%. The Russell 2000 gained 1.2%, loving lower borrowing costs. The dollar index dropped 0.4%, then rebounded 0.3%, while 10-year Treasury yields dipped below 4% before settling at 4.06%. JP Morgan's David Kelly said, "The labor market is getting a little bit weaker, and so they thought it was appropriate to cut rates, but they're not going to cut rates fast because they recognize that there's also an inflation problem out there." Versus the June no-cut surprise. September fueled short-term pops, but cooled on inflation fears. Fun fact: the dot plot split, with Trump's advisor Stephen Miron dissenting for a 50 BPS cut, shows internal Fed tension. Viewer question: market dip or rally? Which reaction matches your portfolio today? Economic data behind the curtain. The cut was fueled by August dismal jobs report. 142,000 added, but revision slashed 818,000 prior months, totaling 1.7 million fewer jobs from March 2023 to March 2025. Unemployment hit 4.2%, with private hiring slowing and public sector jobs surging to 20% of ads. PPI fell 0.1% monthly, but rose 2.6% yearly. Cooling but sticky. Housing affordability? Mortgage rates at 6.35% year low. Help, but the shortage keeps prices high. Powell: There's a deeper problem here, a pretty much nationwide housing shortage. Versus 2024's robust data, 2025's fragility pushed the Fed to act. Pro tip: bookmark BLS.gov for monthly revisions. They're game changers. Retention question: jobs revisions or housing shortage? Which economic red flag worries you most? Drop it below what it means for you. Cheaper borrowing for homes. Rates of 6%. Cars and credit. Refined now of under 6.5%. Stocks favor growth plays like tech, but savers see lower yields. The dollar's dip boosts exports, but hurts importers. With 2 more cuts priced in, it's bullish for equities. S&P could hit 6,000 by year-end. Risks? Tariff inflation from Trump could force hikes. Versus 2020's emergency cuts. This is steady easing. Fun fact: the dual mandate from 1977 keeps the Fed accountable, jobs and prices in check. Viewer question: rate cut for your mortgage or stocks, which benefits you first? In summary, the Fed's 25 BPS cut is a smart jobs boost amid inflation worries. Watch Powell's next presser for clues. Bullish for growth? Who's refined G? Like if this recap clarified the chaos. Sub for market tips, share. Thanks. Money moves await.